Everybody, morning. Good morning. All my channel members like Craig, Don, David, Don, Alden, Diane, Darren. That's a lot of D's. Wow, look at that. 1, 2, 3, 4, 5, 6. That's a bunch of D names right in a row. Hugh, Arturo, Mary, JB, Cliff, Ted, Mad, Ivan, Aki, Kevin, Pauline. Good to see you. And all my regular subscribers like Ryan and Marianne, Larry, Jan. Good to see everybody this morning. This right here was calculated on Wednesday. Holy moly. As the market opens this morning, we'll see $3.7 trillion of S&P 500 just evaporate. Gone out of the market. And then by the end of the day, we're going to have well over $6 trillion worth of options. Just amazing. Just amazing. Oh my gosh. That's just crazy. So let me pull this over and grab another chart really quickly. Pull this down, pull this up. Let me see if I can pop this one out. No, I can't. Cool. And make it a little bigger. Oh, come on now. Gosh darn thing. Come on. Gosh, love all the things. I love software that doesn't work. Come on. That doesn't want to show you this chart. Come on. There we go. Right here. Here's the big chunks of calls and puts on the S&P 500. A big chunk down at 4,000. These are all expiring today. Billions of dollars. Look at the spot market at 6,000. The sweet spot, on when this closed, we were at 59.83 on the S&P. This is actually cash index, not, or whenever the snapshot was, we were at 59.83. This is actually cash index, not the futures right here. Look at these. A big chunk at 5,000, big chunk at 4,000, big chunk at 6,000, kind of the biggest chunk. So would not surprise me if we hung out right around 6,000, maybe just a little lower. Yeah. These probably going to go poof, and these definitely going to go poof off the market right there. So the blue is puts, the green is calls. There's a bunch. Look at almost no puts above. The puts really drop off above 6,000. Of course, we're just sitting right there. We've been hovering right there. So look at all those calls down there. Man, oh man. So fireworks today probably. Be surprised if we don't have some fireworks. 3-wave move up, 5-wave move down, and we bottomed out right kind of where I thought we would. Right kind of where I thought we would. So Thursday, yesterday, even though it was Juneteenth, we had the market open for like part of the day. And then we reopened last night, and then tonight, or last night, we're popping just a little bit, up 21, but I don't know. When you look at the high, you look at the low right here, we're at that 618. We're in this danger zone. If we turn down, things could get ugly pretty quickly. Now, possible. That's 1, 2, 3, 4, 5. I don't know. And full of ambiguity on the futures right there. Full of ambiguity. And with the market closed and low volume, non-committal. So once the volume opens today, I think it's possibly going to be some crazy shenanigans throughout the day. We could see some big swings up and down. Like I said, we were down 59.83 when they did the spot market. We closed down there 59.80-ish. We're going to reopen here in about 8 minutes. It's going to be popping back up in here in the 6,000 area. If we hold that roadmap line on the 15 minutes, it does put down pressure on this thing. Would not surprise me that after today, we've got it freed up to move like options. So the way options work, market makers sell options and then they go buy and sell shares to kind of offset the risk of the options. So when we have long gamma, market makers are trading counter to the options. All right, like if you buy calls, looking for the stock to go up, market makers are shorting the stock to try to make it, to try to balance out their risk. But when we have short gamma regime, market makers are trading the same directions as we are. And it's a, how do you calculate the gamma? You're just going to have to follow people that do that sort of thing. It's not easy to do on your own. It takes a lot of work and calculation. You got to balance, how many calls, how many puts, how many, all the different things that are out there. And there's tools that calculate it for you. I don't have a favorite one right now. But when we're in a short gamma regime, they're trading with us. So you buy calls, they're buying S&P 500, buy calls, they're buying the stock. You sell, or you buy puts, they're selling the stock. So they're trading with you, and that tends to exacerbate the moves. And that's why in high volatility markets, we get increased volatility, and it kind of self-perpetuates and climbs and climbs. So that's one of those situations that develops in the market. And right now, we're just kind of at a neutral gamma. We're slightly long, I think, the last time I checked it. And that's why the moves just been kind of muted the last couple of weeks. We've just kind of been grinding right at this high. We've been waiting for this OPEX right here. So we've just been, we kind of hit the wall. That's 1, 2, 3, 4, 5, 6 weeks. We've just been hanging right there. Just been smashing on the wall right there. And as I've talked about, if we spike a higher high in the market, that completes the 2007 pattern and gets me very concerned that we're going to see a much, much bigger pullback in the market. What's the reason? Who knows what the actual reason is going to be, or who says what the reason is going to be. The charts have the pattern. All right. That's the big thing. Like the warning signs are there. You can choose to ignore it if you want to. That's cool. Hey, Will, thanks for being a channel member. Do appreciate that. As always, I appreciate all the channel members. So we've got that risk to the downside. Looking at some of our other indicators here. Now, market dashboard, if you will. Stocks above their 20-day. This is S&P 500 stocks above their 20-day. You can pull this up for NASDAQ if you want to. Same kind of, it's like ND, TW. But I look at the S&P because it's kind of the broad brush of the market. 500 companies, pretty broad. We cover most of the gamut of different sectors and all that. NASDAQ tends to be tech heavy. This probably is probably working towards its bottom. Now, it doesn't mean we won't pop up here before we head on down, but probably going to revisit the lows. Seems to be grinding down. Now, once we do revisit the lows, we set up the stage to go higher again. That's just stocks above their 20-day moving average right there. So right now, only 43.8% of the S&P 500 stocks are above their 20-day moving average. That's not, that's less than half. So not the big rosy, big up picture we would think. Now, stocks above their 50-day moving average, we have 63.49%. But we're putting downward pressure on it. We did tag the top here back in May. The expectation would be a revisit of the lows. That doesn't mean it won't do a bunch of stuff between now and when we get there. Possibly even make a new high. That's possible. Entirely possible. But big picture, we're probably coming down here. You got to be prepared for a revisit of the lows. All right, that's just S&P 500 stocks. A lot of them are going to go below their 50-day. S5TH. This is the one that is longer term. Stock's above their 200-day moving average. We've been at the bottom, right back here in April on Liberation Day. Pop back up, been grinding that middle 50% area. We're actually sitting at 45% of S&P 500 stocks above their 200-day moving average. A lot of people look at that as kind of the bullish or bearish measure of the market. And right now, with 45% still under the 200-day, that's kind of a bearish market still, despite coming up so strongly off the lows from Liberation Day. Now this thing, likely to go up above 80 at some point. Since we've been at the bottom last time, go to the top. So despite the fact we need a smaller time frame pullback for both the 50-day and the 20-day, the longer term trend probably going to go to a new high, or back to the top right here. So that's just the longer term trend in the market, probably going to go higher. Look at the NASDAQ, still grinding on that downtrend of highs. What a dip. Big dip, ramping right back up. Now we could just grind in this area all day today and then break down next week. That's entirely possible. Once this OPEX frees up, kind of like we've seen some of the biggest moves in the market happen over the weekend after a bunch of options have expired. So today is a cautionary, like this weekend might be a big mover, possibly. May want to exhibit caution. Looks like the market just opened. There you go. S&P opened at 6,000. Kind of like I said, it probably would. Right in the vicinity. Russell. Ooh, look at that. GEV. Cha-ching. That's a new strategy I'm working on. Buy the freaking dip. That one worked out. Russell here popping back up. But when you zoom out and look at this, here's the high, here's the low. We're sitting right at that 618. Cautionary point right here. Be careful if this breaks back down. That's a big three-wave up. Can go just a little bit higher. That's set for a bigger downside right there. Oil. Pop up. Look at what we got. We are trying to maintain this breakout. Haven't been able to get back through the high though. If we get back through that high, probably going on up to 90, if not 100 on sweet light crude right there. It's West Texas Intermediate, WTI, light crude. GC, unfortunately, I think we're probably heading down. Probably these, I moved all these over. What the heck? What the heck? Probably kind of come down somewhere in this vicinity, bounce up here, then get the extension on down. That's what I've been expecting, but we'll see what actually plays out. As always. Bitcoin back rallying just a little bit today. If this one turns sour, yeah, this might be indicating we're going to have a green day in the S&P right here. Risk on, green day, but that's a downtrend. Watch for that to dip. If we dip right down in here, satisfies the correction, we can go on up to new all-time highs. It's not far to go. Just need about $5,000 or $6,000 downside. We can do that dip, cleans it up, sets up the bigger upside potential. I'm pretty sure I deleted like all of these arrows yesterday. So I talked about crypto yesterday quite a bit, especially the altcoin stuff and opportunities like Circle. Look at that, blasting off. Ridiculous highs. Might be able to extend that on up to 352, maybe even 582. All the things I said yesterday, probably coming right back down at some point. So if you're going to play that, play it close to the vest. Be willing to get out on the first sign of weakness. Ethereum, still grinding the roadmap line, not really being very strong at all. NKD, still grinding that triangle. We may fill the triangle on out to July. Then do we break out or break down? Break down, probably take the US market down with it. Dollar. And just being lackluster. Looks like it wants to go on an extension on down to 97. Mag 7 stuff. Apple being non-committal. Non-committal. This has a first move down and is likely to get a second move down. Most of the Mag 7s have that. First move down, likely to get a second move down. They're just stalled out, not really showing any sign of committing to going higher. Google, first move down, potential to do the same thing. Meta, first move down, grinding on this resistance, might take a trip down again. Nvidia, first move down. We've had a couple moves down, just grinding right here. Still has the potential to take a trip back to the bottom. And Tesla, big first move down. And we're hanging out right here at this resistance. Could be a big second move down, but we have a smaller first move down, second move down potential. And if we hold that and break back higher, could be a big bounce on Tesla. We do have the Robotaxi tentatively scheduled to go live to the public on Sunday this weekend. Could be big stuff, could be not so big stuff, not sure. The tracking of robotaxis is live on the Texas DOT website. You can see where they are and their status. It's kind of interesting. I think it's interesting. And then the one Mag 7 that's different, Microsoft, the whole market may be waiting for this to tag a new high, and then we pull back. 49 upside target right there. And it's possible that we're on non-log mode and 486 satisfies that new high right there. Let's see what's happening. I did misspeak yesterday. I mentioned that Elevon was a privately held company. It is obtained by U.S. Bank. After I got off, I did a little work, and it's a wholly owned subsidiary, bought out like 20 years ago. So it's a wholly owned subsidiary of U.S. Bank, but they do operate, and they don't even say they're part of U.S. Bank on their website. So it's one of those interesting. You have to dig to find that information. So it is public, and it's a credit card processor. This stands to be harmed potentially through stablecoin adoption, but not really evident on their chart that that's where a big chunk of their money comes from. Not like when you look at Visa and MasterCard and their reaction to the stablecoin bill. USB as an intermediary, making a bunch of money off the credit card processing, doesn't really show up. Kind of interesting. So Circle, USDC, that's USDC right here. Circle operates this. Combine this and US Tether, and that's 85% of the stablecoin market. Essentially, the narrative is with the stablecoin bill going through Congress, hopefully getting signed by Trump, that it frees up competition for direct from consumer to business using transactions with stablecoins. And maybe Coinbase stands to benefit from that. We saw coin ripping on Wednesday. Right there. Maybe a beneficiary. Lots of people are really hyped up on Coinbase, but they were working a deal with Shopify to be the provider of stablecoin services. Shopify may be able to break out I do kind of, I think Shopify's pattern looks better if we do this correction down here before we shoot up, but has a potential to going up to 141 right there. GMS. There we go, 114. Potential to rip it on up. Didn't do the correction. Breaking out. We close up here. Sets the stage for probably going on up to 114, possibly 121 on GMS. MSGS, Madison Square Garden Sports. It's been a pretty volatile chart. So we've got this big pullback here. Coming up into resistance. If we can get a close up through that resistance, up above that 618, probably looking for 248 on the upside here. LEU, this one keeps being on the morning list, 215. DRI, Darden, ripping. So might be able to make it on up to 243. Restaurants are interesting. They're a story of haves and have-nots. So Darden definitely looks good. Stuff like fast food. And that one looks like we're on a correction. Yum. Looks like we're on a correction. Cheesecake Factory, climbing. Kava, in a correction. CMG, in a correction. So restaurants are kind of interesting. They're like a story of haves and have-nots as you dance through and look at the different ones. And can't ever remember Breaker International. Kind of bullish. This one's probably going on up to 205 right there. ARQQ. Probably gonna, like, this has got the setup to going up to 65. KMX. CarMax just kind of chopping around. Excuse me, still got that cough. CarMax just kind of grinding right here. Like, I mean, it's been sideways for 3 years. Whereas Carvana has been absolute ripping back to all-time highs. So is the industry turning into something more favorable for Carvana over CarMax? I don't know. CarMax obviously struggling here. Trying to figure out how to get the next piece out of the market. So, big consolidation here. I mean, not far above the COVID low. I mean, that potential working on a 5 down. Struggling. Quantum, biopharma, biotech. I just stay away. Reverse split right there. Nope. Hey, Kimberly's here, my favorite subscriber. And Karu, which is 3x bull on Korea. And that thing's ripping. Be careful. It does have reverse splits in here. And we're probably going to come up into a resistance right up here around 100. Right there on this leveraged. Be careful on leverage. Leverage chart on Korea. Let's see. What options? More about this fund. I'm just curious what the holdings are here. That's funny. So they've got, so basically they hold BlackRock, South Korea ETF, and some leverage, some short positions to get the 3x performance. That's kind of funny. So you could go buy EWY or that's kind of interesting. Let's see what EWY is doing. EWY. That's absolute ripping. So got a resistance coming up right here. And yeah, I would be careful. This looks like it might be nearing played out zone. And we can take another trip down because this looks like 1, 2, 3, 4, 5. 1, 2. Gosh. 1, A right there, B down here. And this would be a C right here. A, B, C. Big flat correction. And that leaves this being an A wave, this being a B wave. And this could be a C wave. Yeah, I'd be careful on that one right there. Core weave. See, this one being absolute crazy. Also, 182, possibly. Yeah, we could shoot it on up to 300. Entirely possible. SMLR, Smelser, Bitcoin Treasury Company, potential. I mean, trying to be. Doesn't look too strong on that chart. Looks a lot like Mara's chart, really. MSTR, probably. Like, if Bitcoin drops on down, we'll probably see this hit the roadmap line. It's just my expectation. We've got like a first move down, a retrace, and looking for that second move down. Wheeler Real Estate, reverse split, reverse split, reverse split, reverse split, reverse split, reverse split. What a piece of garbage. Don't trade that. Restoration Hardware. So there's the potential. We've got this move down right here. We had this little pop on earnings. We might see another move down if we hold that 618, the bigger 618. That might be a huge opportunity for much higher prices. Now it could just rip from where we are. That's entirely possible that, you know, we did satisfy the downside and we could just rip right up there. So it's kind of a coin flip. Like, does it pop or does it just grind in this area? If it grinds down, sets up the pop. If it gets through the roadmap line, it's still got the pop set up. So somewhat bullish on Restoration Hardware here. Gorilla Technology. We've got the high, we've got the low, we've got the move up, but it's still below resistance. We need that breakthrough, that resistance to go higher. Connell. 2x leverage on coin. If you think coin is ripping out the new highs, this would be a more affordable way, not lower risk, mind you, but more affordable way to get into some leverage without buying options. Still think I am long this and still looking for that 107 type target up there. ETHU, as Ethereum suffers, this one's suffering. With the leverage, it will bleed down faster than Ethereum. Golly. CLS set to go on up. Probably 164 target on the upside. Sezzle, looking like we might push it on out the 320 or so. QBTX, that's 2x leverage on QBTS. QBTS. Looks like we might be in for a correction on QBTS. Oscar, Health. Looks like 26 is possible for this one. BTCO, 2x leverage on Bitcoin. Like I said, if we're hunting for a correction on Bitcoin, Bitcoin related stuff, probably going to get a correction. Said different ways. ALAB, potential for this to be a first move down, a revisit of this resistance area. We do have the gap down hanging out right up here. Gap downs tend to be a big resistance, just like it was here. Be a resistance again, typically. And this might be a situation where we've got one move down, just like a lot of those Mag 7s. We could see a second move down here. So I would have caution on this one right here, Astrolabs. IWM, as I talked about, this could be a first move down, second move down situation. This is just Russell. Talked about that earlier. I've talked about it quite ad nauseum. Could be taking a trip down to this 150 area very quickly. Build our first source. And home builders looking like they might be at some sort of bottom here. And I don't know that they're done on the downside, but we may have a little reprieve. Go revisit the roadmap line. We're seeing that across even the leverage stuff, looking like it might have a bottom in it. We're seeing DR Horton, kind of the same pattern. Toll Brothers, kind of the same pattern. Home Depot, kind of the same pattern. Lowe's, kind of the same pattern. So we're seeing this potential bottoming in builders and builder supply stuff. DPST, regional banks, as we come into the end of the half of the year. Third quarter earnings for financials usually spark a little bit of bullishness, but may not show up in this chart. FAS is usually the one we see that in. And XLF, financial sector. Now this looks like between now and the end of the month, we might see a little dip here before we see that rally. But we usually see money flowing into financials ahead of the quarterly earnings reports. Financials are one of the first things that reports, like JPM. And it's if money flowing in. Goldman Sachs, Wells Fargo, WFC, BAC. Yeah, everything looking not too bad. BitX, 2x leverage on Bitcoin, probably going down with Bitcoin. BitU, another 2x leverage on Bitcoin. PSIX, Power Solutions, watch for a correction there. We're at targets, could extend up to 78. ETHT, another Ultra Ethereum. This one's split, reverse split, danger in the air. FBTC, another Bitcoin ETF, may decline here. Looking at decliners, things that were moving $2 or more down. Look for opportunities. Accenture, new low right there. Could be wrapping up, but I do have a target down here. If we extend this on down, we might be heading on down. RGC. This one continues to be crazy after that stock split, 38 for 1. And be careful. I would be very careful. Things that go exponential tend to come right back down exponential. PPLT, probably going on up to this 160 target up here. This is platinum. PL1 exclamation point. Breaking out. See platinum. Could be a big winner here. Cruise on up to 19,000 or 1900, excuse me. 1,900. NWGL, Natural Wood Group Limited. Nature Wood Group Limited. Forest Products. Yeah, so that might be a roadmap bounce, but not really kind of trend the glean out of that chart right there. GDXU, 2x leverage on GDX. This looks like we're kind of topping out. Potential to get a bigger retrace again. Toyota Motors. Yeah, I kind of warned that we might, when we couldn't break higher, that's kind of a setup to push on down. No bueno. So look at the support here. Coming into this 168 support, if we can hold it, there's potential to go higher, but if we break down below it, might head on down into the 140, 150 area for Toyota right there. The one thing that showed up on my scanner on Wednesday was this one. We've got this high, we've got this low, got that potential entry right there, 27.94 potential target right there. Not the greatest statistics, so doesn't really matter. Historical, 75% of the time, we're probably going to extend it up. Not too bad. Bias for the day. I kind of beat that horse in the beginning, but probably going to grind this 6,000 area would be my expectation. We could flush out a little bit, a bigger picture for the next, through the end of the month, maybe go on this correction right there. But today, I would expect just shenanigans grinding around this 6,000 area right there. All right. Thanks for coming, everybody. I'll be back alive Monday. We'll do it all again. Hunt down, look for opportunities. And I'll see you later. Remember, the account you save may be your own. Nobody's watching out for your money more than you are. So if you don't take a vested interest, can't say anybody else is. Have a great day.